QuickBooks Online 2021. Pay employees. Let's get into it with Intuit's QuickBooks Online 2021. Here we are in our Get Great Guitars practice file. We're going to be thinking about payroll, remembering that if we run payroll within the QuickBooks system, it will typically be an add-on type of feature, meaning we'll have to basically pay more for payroll, different options that we can choose for the support given for the process of running payroll within QuickBooks Online. And we do have other options as well. We might go with a third-party payroll support, something like an ADP or a Paychex, and then think about how we're going to process the payroll, what they would then handle versus what we would need in the QuickBooks system. Now, we set up payroll in a prior presentation, even though it is an add-on feature, noting that we got basically the free 30-day trial of it. So we said, why not do it? But QuickBooks may not always offer the free 30-day trial, and we want to make this course so that everybody can go through it with basically the free 30-day trial or some free version of the software. So we'll try to enter the payroll in a couple different ways. One, processing it through the payroll system, and two, thinking about it in terms of a journal entry. Then we'll take a look at payroll in more depth in possibly another section, and we have a whole course basically on payroll. It is something that can take up a whole course in and of itself. So like I say, we set up the payroll in a prior presentation. We set up our two employees. We have our two employees down here. And to process payroll, once set up, then we could just run the payroll. So we're going to go up and say, run the payroll. Now I'm going to run it just for Hamilton and not Erica. And then the second item, I'll try to put in kind of manually, imagining we had a third-party system, which will help us to think about the journal entry type of format as well and what a register looks like and all that. So let's uncheck Erica. So I'm going to uncheck Erica over here, and then we're going to say up top, this is going to be the pay period because this was the next pay period in. We were saying that we were going to do it monthly. So this is the pay period schedules that were mapped out by Intuit. And then the date that we're having the pay on, let's bring it up one more day or make it up to the January 31st. So we'll bring it up to January 31st here. Again, I'll uncheck Erica. Notice that these 2 days, the period end and the pay date, are not always the same. That's going to be how we set it up basically in our system. You might have the period end and then the pay date happening at some future point. So I'm going to uncheck Erica down here, and then we're going to go to the pencil on the right-hand side, which will give us the detail about Adam's pay here. So we got the salary pay, the $4,583.33, and that was the $55,000 that was a year because we said that Adam was an annual salaried person. So 55,000 divided by 12. That's going to give us the 4583. Then we'll open up our employee taxes information. Now we might adjust some of these just to make it more generic so it ties into what we have in our bank reconciliation when we do our bank reconciliation items. But in any case, the federal income tax, it's calculated at the 423.96. Now this one is calculated based on the W-4 information, and this is going to be the income tax that they will pay on basically their 1040. They're prepaying it here, and we're using the system to kind of do that calculation based on the W-4 information we input. I'm actually going to change that to our practice problem data just so it lines up. Once again, the net check lines up to what we will put in place when we do our bank reconciliation. So I'm going to say that the federal tax is going to be then the 720. So we're going to say 720. So we have adjusted that. The Social Security and Medicare, those are going to be very straightforward because we just take kind of more like a flat tax rather than the federal income tax, which is progressive and therefore complex. 4583.33 times the 0.062. That's going to give us our 28417. The Medicare is straightforward, pretty much flat tax as well, where we're going to take the 4583.33 times the 0.0145. So that's nice and easy to calculate. The California tax, I'm actually going to try to remove the California tax here because I'm going to try to keep it on the federal level. I probably shouldn't have included the California information for it. They won't let me remove the disability insurance, so we'll keep that. So this then is how much was taken or withheld from the employee check. So if we take our trusty calculator over here, we got the gross pay of the 4583.33 minus how much was withheld, the 1125.63. That's going to give us the net check that's going to go, which is the 3457.70. So that's our net check. That's going to compare to our little register we have over here. We could see it in a register format. Earnings minus Social Security, Medicare, and then the income tax, and then they took out some of the SDI, state disability, and so that's going to be that. And then we're going to have the employer taxes down below. That includes the federal unemployment tax, FUTA tax, which is the $27.50, and then the Social Security tax, the Medicare. So we have to match these items here, Social Security and Medicare. We pay over and above the employee pay, and then the employee deducts their portion from their pay. So there we have that. And so let's say okay on that one, and then let's process this one for Adam, and then we'll do Erica as if we have it done by like a third-party person. We'll do it with kind of a journal entry format. So let's go ahead and preview the payroll. So there it looks. There's the payroll preview. There's the net check. Let's go ahead and submit the payroll. Payroll has been submitted. And then we're going to assign a check number. I'm just going to say let's say it's not a check number here, and I'm going to say finish the payroll. They need a check number. All right, check number 1010, and then finish the payroll. Now we can then look at the pay stub here. The pay stub still needs to be provided to the employee whether or not you have electronic payments or not, because the pay stub needs to tell the employee the information both for the current check as well as the year to date. That means we need to know how much they earned, in this case $4,583, minus what was taken from their check, the federal income tax, Social Security, Medicare, and California tax and disability taxes. Notice the employer taxes, our portion of the Social Security, Medicare, and FUTA, federal unemployment tax, is not included on the employee paycheck, because that's what we had to pay over and above. We didn't take that out of their wages. We had to pay that over and above. Let's open some reports up top. So I'm going to close this out. I'm going to go up top. I'm going to right-click on the tab up top and duplicate. And then I'm going to do it again, right-click and duplicate again. And we want to see both the profit and loss and then the balance sheet report. So I'm going to go to the reports on the left-hand side, and let's take a look at the P&L profit and loss report. And then we'll do the range change up top, range change from 12/31/21, and run that report. Close up the burger, hold down Control, zoom in just a bit to that 125. Second report to the end. Then we're going to do the same thing, reports on the bottom. Then we'll change the, or pick the report of the balance sheet, and then we'll range change it up top, ending at 12/31/21, and run that report, closing the hamburger. And then we want to scroll down and say, okay, what's the impact of this? Well, normally it would just be a decrease in the checking account. So we got a decrease in the checking account here for the one we ran, payroll. So there it is. We decreased that item. If I click on it, it's going to take us to basically that paycheck type of form, but it's indicated as a paycheck. So it's still kind of a check, but it's the paycheck information. It gives us our detail about it down below. So I'm going to close this back out and scroll back up and go back to the employee list. They're taking me to the employee list. That's not where I want to be. I'm going to open the hamburger again, go to the reports on the bottom, and we want to be on the balance sheet. We're trying to get to the balance sheet. Scroll back up top, range change it to end at 12/31/21, and run that report. Now the other side typically would go on the income statement. Here's going to be the wages down here, and here's the item. Now this is the gross pay, not including the withholdings. So this is the gross pay that was earned before the withholdings were basically taken out. And then we had withholdings that were taken out. If I go back to the report, those withholdings are going to be back on the balance sheet. So we go back to the balance sheet, close up the hamburger, and those are a payable type of thing, similar to what we saw with the sales tax. So down here we got our payroll liabilities, which you can kind of group together or break them out. And they're saying you got SDI, the ETT, the federal taxes, which are going to be reported on the 941s and 944, and the federal unemployment, which is reported on the 940. These are all resulting from us either taking the money out of the employee checks and then having to pay it to the government on their behalf to pay for their Social Security, Medicare, and federal income tax, and they're going to be the amount that we had to pay over and above, which includes the federal unemployment tax and our portion of the federal taxes, including the Social Security and the Medicare. So these are going to be things that we have to then pay down. Now we can think about this in terms of, let's think about the third party doing this kind of payroll process. And if I go back on over to our register over here, if this is what happened for Adam, I'm going to delete Adam up top, and let's just think of Erica. And let's think we have Erica, and let's just imagine now a third party is processing this for Erica's information. And you could do the same thing for Atom. If you don't have the payroll, you could just enter it like a journal entry, like a register like this. And note that if we had a third party doing this, then we might not have to deal with issuing, say, Erica the pay stub or anything like that. What we have to deal with, because the third party will deal with that for us. It'll give the information to Erica, the information they need. What we have to do on our side is then just make the financial statements correct and make sure that we can then tie out to the bank statement when we do our bank reconciliation. So we would get something possibly like a register from our ADP or our Paychex or our payroll provider, and then we would have to basically enter this into the system some way, which they might do for us. We can link our system up so that the check would be recorded, or the check would flow through, obviously, if we had bank feeds or something like that. But we'd still need to record, we should record the whole accrual process into our system. So again, you could do it kind of, if ADP was handling it, or some other company was handling it, Paychex, whoever, a payroll company was handling it, we could kind of be on a cash basis on our side and then just do year-end adjustments according to the 941s, the 940, and so on, and not have to get into even complex journal entries really to make our financial statements correct periodically when they are needed at the end of the month and or year. But if we want to enter it in payroll by payroll, we can just take the register and then kind of enter that same information in. So it would look like this. We're going to say Erica got paid 40 hours at $20, and the Social Security that was taken out is going to be the 800 times the 0.062. The Medicare is going to be that 800 times 0.0145. The federal income tax, we would have to calculate based on the W-4, which is more complex, and typically the computer's useful to use that. We're just going to say that it's going to be $110. That means the net pay would be the total pay minus the Social Security, Medicare, and income tax, and that's going to give us the $628.80. Then we, the employer, would have to pay over and above the other $49.60 and the Medicare. This breakout of the employer taxes and the employee taxes is something that can be quite confusing to people. So that's if you can understand that, you got kind of a big advantage over most people's understanding of payroll. If we were to record this, then we could just basically write a check. The check would decrease the checking account by the net check, which in this case is at $628.80. Then the payroll expense would go on the books for the gross check, the $800, how much was actually earned, not the gross check, but how much was earned, gross payroll. The difference would be the liabilities, which includes the Social Security, Medicare, and income tax. Now, we could do this with a journal entry like we see here, but when we put it into the system, we probably want to do it with a check because it's hitting the checking account, and we're going to want to basically do a bank reconciliation and see it in the checking account. So we'll use a check to enter it into the system. Then we're going to have to enter another item, which could be a journal entry because it's not going to have a check yet, and that's going to be our portion of the liability that we have to pay payroll liability, payroll taxes, based on the employee pay. So now we're getting charged taxes based on the employee pay. So we're going to record payroll expense or payroll taxes expense, it could be, and then we're going to credit the payroll liability again. So let's go ahead and do this one. So I'll do this one in a more kind of generic type of way. So we're going to say, all right, generic in that it was done by ADP and we're not doing it through QuickBooks. We're just going to basically enter the totals into the system. Because also note that if I had multiple employees, I may not need to enter each one of the employees. I can enter them all in as a lump sum, although I want to make sure that however I enter it, I can do the bank reconciliation because the checks are actually going to clear, and I want to make sure I can reconcile what I put into the QuickBooks system to what clears the bank. You also might set up a separate payroll account just to make that easier to do, make that linking up process easier to do. Okay, so let's go back on over. So we're going to say, all right, let's go back on over, and I'm going to go to the first tab, and let's do this with the drop down, and I'm going to do this one with just an expense type of form. Expense type form. And this is going to Erica. So I'm going to say Erica, which is our employee down here. And it's going to come out of the checking account. I'm going to say this happens plus. I'm going to say it's the end of the month on the 31st. So the 31st, we're going to pay We're going to pay it with we'll say electronic transfer this time. And I'm going to scroll down, bring this down to 100%. Now the categories that are going to be affected then, if I go back on over here, the gross pay should be that $800. So we should have payroll expense. Let's say payroll expense, or they called it wages. Wages is going to be then $800. So we'll say 800. And then we're going to have another item, which is going to be the other item that is not cash, is the payroll liability. And it's going to have to be a negative number for our purposes to make the check correct. So I'm going to say payroll liability. Now they grouped the liability accounts into multiple payroll liability accounts with a subgrouping. Let's see what they did. They put payroll liabilities and then they grouped them down here in these categories. I'm just going to put it into the parent account of payroll liabilities, just in general, to group it into one account. And then that is going to be for the sum of these items, which is the 17120, the 17120. It's going to be a negative. So we'll say negative 171.20. And there we have that. So the net check then that's going to go out is going to be the 628.80. So that 628.80 is the net check. And then the liability is going to go up, and I'm just going to group it in general to payroll liabilities by that. And then the payroll expense will go up by the $800. So let's check that out. And so that looks good. So I'm going to say save it and close it. Down here, we're going to say save and close. And there we have it. Now, if I go back to my reports, going back to the reports, and we're just going to scroll up top and say we want to run the report. Hold down Control, scroll up just a bit, and then we can scroll down and say that, well, the checking account up top, checking account should be going down by the net check. So there's the 628.80. Scrolling back up, and let's go back then. The other side then is going to the income statement. Income statement, let's refresh that report, running it again. And we put it into the wages. So the wages here. Now we had one processed within the system and one that we processed imagining that it was done by a separate payroll company of the $800 here. Scrolling back up. Then the other side, or the difference, is going to go to the liability that we took out of the employee wages. Scrolling back up top, that's going to be then going into the payroll liabilities. That's the 171.20 that we put in here. Now we also have then our portion of payroll liabilities that we're going to have to pay over and above what we paid to the employees. And this is often confusing to people to break out the difference between the employee payroll taxes, the stuff that we pulled out of the employee wages, which is included on the income statement in terms of just gross wages, because we recorded the gross wages. We didn't break out the gross wages and the amount that we took out of gross wages because it's the employee's payroll. We're just the tax collector. We're just required to take some of their own money and pay it for them to the government. But then we have to pay, we're taxed based on their wages for the added amount. That's really what the payroll taxes should be. So down here in a journal entry, we could say then we have a debit to payroll taxes, which is going to be our portion of the Social Security and Medicare, and then the liability will go up and we'll pay that in the future. We're going to enter that into QuickBooks with simply a journal entry of some kind because cash is not affected on this one until later when we actually pay it. So to do that, I could use the register. So I might use the payroll liability register because it's a balance sheet account. And that way we can do it without like debits and credits. We can still do a journal entry without using a register. So let's go back on over. First tab over here. We're going to go down to the chart of accounts. So we'll go down to the accounting. And then we're looking for the chart of accounts. And we want to go into the liability account for the payroll liability accounts. So here's the payroll liabilities. I'm going to go into that one and I'm going to use the register for it, closing up the hamburger. And then I'm going to make a journal entry, hitting the drop down. So I just want to make a journal entry for it as of the end of the month once again, which is going to be the 31st. So we'll say the 31st. And then the payee, it's going to be payroll. I'm just going to say that this will be an increase of the 6120. So we'll say 6120. And then the other side is going to go to the payroll taxes. Payroll taxes. No, we don't have that. It was under wages, payroll wages. It's in the expense side. Let's see if we can find it here. So scrolling down, payroll expenses, we got the taxes, payroll taxes. That's the one we want. And then we could say this is payroll for January or something like that on the memo. All right, let's save it and check it out. We're going to save it. And then let's go back to our forms, going back to the balance sheet here. Let's run that report again. I'm going to run the report. And now we've got our liability is going to increase now once again, but this time by our portion. Payroll liabilities going into that item. And now we have the journal entry of the 6160 that it increased by for our portion of the payroll liability. Scrolling back up, going back on over, and then we could go to the profit and loss, run that report. And we want to take a look down here. Now we have the wages. This is the portion of it that is gross wages, which includes the payroll liabilities that the employees had to pay, which were taken out of their paychecks. And then here, the taxes are the employer portion, the amount that we had to pay. These are taxes that were actually applied to us, the employer, even though they weren't based on our income. They were based on the income that we gave to the employee. That's why they're in our taxes on our income statement, whereas the taxes that were the employee taxes are just something that we had to pay for them. So we still deducted it, but we deducted it as part of their payroll. So here we have the journal entry, and then we have the payroll tax there that was in the prior check. Okay, so hopefully that made sense. I'm going to go back. I'm going to take a look at our right click up top, and let's do a trial balance. I'm going to duplicate this thing and go down to the trial balance because it's a good one to check your work with. If we go to the reports on the left-hand side, we're then going to open up the trustee TB, the trustee trial balance. So we'll type in the trial balance, and open that up. Range, change it up top, ending at 12/31/21. Run it. Hold down Control, scroll up just a bit. And if the payroll, once again, is something that people often get mixed up. Whether you have a third-party payroll provider, whether you do it in-house, there's always going to be complications with payroll, and most people don't understand it. So it's a really good one to kind of go back and forth from your data entry to your trial balance here. The trial balance will be easier to work with and try to get a comprehensive of what's going on with the payroll just in general, and that could really be beneficial. And we do have a payroll course in and of itself if you want to go into more detail on withholdings and 401k plans and health plans, and what if someone hits the cap, and filing 940s and 941s and W-2s and W-3s and all that good stuff.